Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. The new year has brought in some big news on interest rates. Almost all big banks have announced a cut in lending rates. And home loans are, of course, becoming cheaper. 8.65% seems to be the new magic number. Now, while this is great news if you're taking on a new loan right now, what about existing borrowers? Do you stand to benefit on your existing loan? If yes, then by how much? If not, then do you need to switch? What are the costs involved? As always, the devil lies in the detail, and that's exactly what this episode of Money, Money, Money is all about, dedicated to demystifying the home loan math. My guests today are Mr. Harshil Mehta, CEO of DHFL, and Adil Shetty, CEO and founder of Bank Bazaar. Thanks, gentlemen, so much for joining in. Great to have you in the studios. Great. Well, gentlemen, before we get started, I thought I'll give some examples to viewers. So here's an example of the sort of cuts that we've seen in the last couple of days. Now, it was the State Bank of India which took the lead in the rate war with a massive cut of 90 basis points in its MCLR, or the marginal cost-based lending rate. For salaried borrowers, SBI is now offering a home loan of up to 75 lakh rupees at a rate of 8.65%. This is for male borrowers, of course. ICICI Bank is offering the same floating rate loan at 8.7%. While fixed rate loans at ICICI Bank range anywhere between 8.7 to as high as 10.1%, depending on the tenure. How fixed is that fixed loan? HDFC's floating rate, for instance, for a loan of up to 75 lakhs starts at 8.7%. Now, bear in mind that all of these new loans and these new rates that we're talking about, they are linked to the MCLR regime. So first things first, I mean, there's a lot of jargon out there for people who don't understand. But Mr. Mehta, let me start with you. It sounds like a great bonanza, but is it really?
Well, Surabhi, I must say that it is a great bonanza. And the rate reduction, especially which has been announced with respect to MCLR, definitely brings in good news for those set of people who are going to buy new home loans. Because, you know, when you go and buy new home loans, you apply for a loan and you get a rate which is applicable as on date. Now, if you really look in this entire thing, it is only talking about rate reduction in MCLR. And second, it talks what are the new rates. Nowhere it mentions anything about the existing customer base, which usually we have always seen after a RBI repo rate or anything like that. You always see that how it benefits the existing set of customers. And that's where things like switching loans and all those come into play. But all in all, good news for people who really would like to take a home loan and move into their new home.
Okay. Adil, your thoughts. Is this actually a good deal for existing borrowers, or is the bonanza going to be limited to someone who's now looking at applying for a loan?
So like Mr. Mehta said, I think it's very positive, and one of the benefits that was expected out of demonetization was that loan rates would fall. So I think it's positive that the MCLR of SBI has been cut by 90 basis points. Now, that being said, right, I think customers fall into three buckets, some of who will automatically get the benefit, some of who have to wait and watch. So if you're a new borrower, like Mr. Mehta said, the benefit automatically accrues to you. You take a loan tomorrow, you're a male applicant, 8.65%, you're a female applicant, 8.6%, straight guaranteed. Second bucket, you are on MCLR already. So post April 1st, 2016, you took a home loan. Automatically, the 90 basis point cut will impact you and your EMI will go down on your reset date. You get benefit. However, like Mr. Mehta said, if you're not either a new borrower or already on MCLR, which means you're either on base rate or you're on BPLR, you have to wait and watch to see what happens to the base rate.
When the transmission happens to the
base rate or the BPLR.
So, you know, let's take this one step at a time and talk about people who are already linked to the MCLR. And these would be people who have taken a loan in the last 1 year or thereabouts, because the regime came into being 1st of April 2016, right? Now, for such people, should they just wait and watch? And hopefully their lender is automatically going to pass on. Will the transmission be absolute? Will it be transparent and all of that benefit will come through? Or is that pretty much open to discretion?
Well, again, in this, you will have two scenarios. One is, let's take a scenario where a customer has taken a loan in the month of May 2016 in MCLR regime. And usually, Usually all the home loans which the banks do on MCLR are on a 1-year MCLR. Which means that if you have taken a loan in May 2016, the next reset will happen only in May 2017.
There are some exceptions, and I think at least Axis Bank would be one of them, because I was speaking to some lenders, and very few of them, I guess, but some do reset even on a half-yearly basis. But largely speaking, you'd say 1 year, is it?
See, by and large, it is 1 year reset. Some of them have a 3-month or a 6-month. Usually in a home loan, retail home loan, you will find bulk of it being an annual reset. Some of them offer 6-month MCLR. So in this scenario, one who has taken in May 2016, perhaps the next reset would be in May 2017, which would be applicable at that point of time.
So whatever is the prevailing MCLR rate in May 2017,
exactly,
the home loan is going to be reset as per that.
As per that, right?
Okay.
So in the interim, if there is a further reduction or there is an upward revision, because this is marginal cost of rate, one has to wait and watch for that. The other alternative is that you go to your existing banker and you say, hey, look, I have this MCLR now, I want to switch over. So that switch over facility is available. Usually for that there is some amount of fees being charged to change, and move from a, let's say, 1 year to a 6-month or a 3-month MCLR. So
Adil, come in on this. Let's take the same example that Sir just raised over here. If, I took the loan in May 2016, the reset happens in May 2017, is it worth my while to just wait it out and see what the rate is going to be, what the offered rate will be in May this year?
Yeah, so see, the objective of the MCLR is to improve transmission from the cost of funds to the existing borrowers. So, it's crystal ball gazing to say that in the next 6 months, is it going to go up or down? I think the MCL regime is very well designed. So I would say that if you're already on MCLR and you're waiting for May to come up again, just wait for it, because, your reset will anyway happen. Think of it this way. Let's say you refinance and you start in January. Your reset date again is 1 year away. So if something gets cut further in May, then you might not get the benefit. So if you're already on MCLR, I think you're well taken care of. Just watch the benefit flow to you if rates continue to keep falling.
Even if my reset might be later, maybe not in May, maybe my reset will only come by, let's say, September or October of 2017. Even then, you're saying, be patient, wait and see what your current lender is willing to offer you.
My feel is that if you're already on MCLR, a regime which is designed to increase transparency in rate transmission, I think you're taken care of. Just wait for the change to come and accrue to you on your reset date. Even if you were to refinance your product, you would then come into another 12-month cycle, and 6 months later the same thing could repeat.
Okay, now we've just tackled the first lot, people who are already linked to the MCLR regime. What happens if you're not on MCLR, if you're on the old regime, the base rate regime? That's when things get really interesting. We'll come back and tackle that on the other side of the break.